Most investors think silver's price should rise in lockstep with inflation, expecting a neat, predictable correlation between the two. It seems logical. After all, as the value of paper money erodes, shouldn't hard assets like silver automatically become more valuable? But that's a costly misconception. Relying on this belief can lead to missed opportunities and poor timing in the market, because silver doesn't play by those simple rules. The relationship isn't linear or predictable. Silver often moves in sudden, dramatic bursts after long periods of quiet. Its price can remain stagnant for years, only to surge unexpectedly when conditions align. Look at the 1970s. While inflation soared, silver's price exploded from under $2 to over $30 an ounce, far outpacing inflation and even gold. This wasn't a fluke or a one-off event. It was a powerful demonstration of silver's unique behavior in times of monetary stress. When faith in fiat currency collapses, investors rush to real assets like silver. It becomes a safe haven, a store of value when trust in governments and central banks is shaken. The lag between inflation and silver's price isn't failure. It's the market coiling, ready for a powerful move. Like a spring under tension, silver stores potential energy, waiting for the right trigger to unleash it. Silver isn't just another commodity, it's a monetary metal, reflecting deep shifts in currency value, not just industrial demand. Its price tells a story about confidence in money itself. Day-to-day volatility fools the mainstream, but the real trend is relentless currency devaluation and the inevitable revaluation of hard assets. Over time, the purchasing power of paper money declines, but silver's value endures and often surges in response. Silver doesn't just mirror inflation, it magnifies the consequences of bad monetary policy. When governments print recklessly, silver acts as a barometer, amplifying the effects and signaling deeper problems. Those who understand this history and wait patiently are rewarded when the spring finally uncoils. Patience is key, because silver's biggest moves come when most have given up hope. Ignore the noise, focus on silver's role as a lever, not just a hedge. It can multiply gains dramatically when the right conditions strike. The real power of silver is revealed in moments of crisis, not in quarterly reports. When the system is under stress, silver's true value comes to light. If you want to protect and grow your wealth, understand silver's true relationship with inflation, and be ready when history repeats itself. Silver is unique. It's both a monetary metal and a critical industrial commodity. Unlike gold, silver's value is powered by two engines: its ancient role as money and its modern role in technology. When trust in paper money falters, silver becomes a safe haven. But it's also essential for industry, used in everything from smartphones to solar panels. This dual demand creates a dynamic market. Industrial use provides a price floor, while monetary demand can send prices soaring. In calm times, industry drives demand. In crises, investors pile in. The perfect storm is when both forces hit at once, like now, with a tech revolution and monetary instability. Silver's dual identity means it thrives in both booms and busts. That's what sets it apart from every other asset. Understanding this is key to seeing silver's true potential. Silver's industrial demand is relentless and growing. Over half of all silver is consumed by industry, much of it lost forever in tiny amounts across countless products. The green energy boom, especially solar panels, is driving massive, inelastic demand for silver. Electric vehicles and advanced electronics require even more, locking in higher consumption for decades. Silver's unique properties, superior conductivity, irreplaceability, make it essential in tech, healthcare, and clean energy. Unlike other metals, there's often no substitute for silver. Industries will pay whatever it takes. This creates a powerful, non-negotiable demand base, supporting prices even when investors are cautious. Ignore silver's industrial story at your own risk. It's a key pillar of its value. And silver's true power lies in its monetary soul. For 5,000 years, silver was money, circulating as currency and anchoring economies. The current fiat system, based on unbacked paper, is a historical anomaly and already showing cracks. Governments are drowning in debt, and central banks print endlessly, eroding currency value. Silver is a finite asset, immune to digital dilution. Owning physical silver is a vote of no confidence in fiat money and a way to preserve purchasing power. While paper assets can go to zero, silver's intrinsic value endures. Every fiat currency in history has eventually failed. Silver's role as money always returns. As the current system unravels, silver will again be recognized as a trusted store of value. It's not just a relic, it's the future of sound money. In times of crisis, silver is the ultimate insurance policy. Silver's supply story is just as critical as its demand. The market has run a structural deficit for years, consuming more than it produces. Once massive stockpiles are nearly gone, leaving little buffer for shocks. Most silver is mined as a byproduct of other metals, so supply can't quickly respond to price spikes. New mines take over a decade to develop, and investment in exploration has lagged. The result? A fragile, just-in-time inventory system for a vital metal. Any disruption, strikes, geopolitical turmoil, or a surge in demand could trigger a scramble for physical silver. The world is running out of slack. The fuse is already burning. Silver's supply is tight, but demand is surging from two fronts. On one side, we have the industrial sector, which relies heavily on silver for various applications. On the other side, investors are increasingly turning to silver as a hedge against inflation and economic uncertainty. Industrial consumption is locked in and growing. Solar, EVs, and tech can't function without it. The push for renewable energy and advanced technology is driving this demand to unprecedented levels. At the same time, investors are waking up to inflation and seeking real assets. Silver, with its historical role as a store of value, is becoming increasingly attractive. Both groups are competing for the same limited pool of physical silver. This competition is intensifying as both industrial and investment demands grow. Unlike gold, where investment demand doesn't clash with industry, silver's competition is direct and fierce. The dual demand creates a unique dynamic that sets silver apart from other precious metals. Every ounce bought by an investor is one less for industry, and vice versa. This tug-of-war over silver resources is creating a highly competitive market. This creates a compounding effect, demand from both sides straining a fragile supply chain. The logistics of getting silver from mines to markets are becoming increasingly complex. The result? Explosive price potential. As supply struggles to keep up with demand, prices are poised to rise dramatically. We're witnessing a perfect storm. Inelastic industrial demand meets a monetary awakening. This convergence is setting the stage for significant market movements. The next bull market in silver will be fueled by this intense competition. Both industrial and investment demands are acting as powerful catalysts. When both engines fire at once, the move is historic. The synergy between industrial use and investment demand can lead to unprecedented price surges. The time to position is before the scramble begins. Those who act early stand to benefit the most from the coming silver rush. Silver's volatility scares many investors, but it's actually a sign of strength. The market is small and thin, so even modest buying or selling can move prices dramatically. Its dual role means sentiment shifts in both industry and investment can cause sharp swings. Volatility keeps big institutions cautious, leaving more opportunity for individual investors. The price of admission for silver's upside is learning to ride out the turbulence. Downward spikes, often driven by short-term sentiment, are buying opportunities for the patient. Focus on the long-term trend: rising demand, tight supply, and currency debasement. The real money is made in the sudden upward spikes that leave the unprepared behind. Don't let volatility shake you out. Embrace it as your edge. The path is jagged, but the destination is much higher. Ride the dragon, don't fear it. Most mainstream investors misjudge silver, seeing it as poor man's gold or just another industrial metal. They miss its unique dual nature and underestimate its explosive potential. Even legendary investors like Warren Buffett have treated silver as a mere commodity, missing its monetary significance. When financial systems are stressed, silver's price is driven by fear and a flight to tangible assets, not just industrial use. The industrial demand sets a floor, but monetary demand creates the upside. Mainstream models focus on quarterly data and miss the big picture, a once-in-a-century monetary realignment. They're caught off guard by volatility and left behind when silver surges. Their mistake is your opportunity. See what they can't. Silver's true power is unleashed in times of crisis. Don't miss the forest for the trees. Silver isn't a get-rich-quick scheme. It's a long-term strategy for wealth preservation and growth. Unlike risky trends or speculative assets, silver has stood the test of time as a reliable store of value, trusted by generations. Ignore daily price noise, focus on the fundamentals. a broken monetary system, surging tech demand, and tight supply. These are the real drivers that shape silver's future, not the short-term headlines or market jitters. Inflation is a hidden tax, eroding your savings. Silver is your financial fire extinguisher. When the value of paper money shrinks, silver helps preserve your purchasing power and shields your wealth from being silently drained. Accumulate physical silver over time, using volatility to your advantage. Every dip is an opportunity to add more, building your position steadily and thoughtfully. Don't try to time the bottom. Dollar-cost averaging builds a solid foundation. Consistency is key. Small, regular purchases can add up to significant wealth over the years. The key is to get off zero. Start converting paper savings into sound money. Even a modest start can make a difference, as you gradually shift your wealth into something tangible and lasting. The road will be volatile, with sharp drops and euphoric spikes. But remember, volatility is part of the journey, not a reason to abandon your plan. Ignore the media hype and stay focused on the long-term horizon. True wealth is built by those who remain patient and disciplined, not by chasing the latest headlines. The convergence of industrial and monetary demand, plus constrained supply, makes silver's case stronger than ever. As technology advances and resources tighten, silver's unique role only grows more vital. Owning silver is an investment in financial sovereignty. It's about taking control of your future and protecting your family's legacy. It's a bet against the inevitable failure of fiat money. When currencies falter, silver endures as real, tangible wealth. In the coming storm, silver is your anchor. It provides stability and peace of mind when uncertainty is everywhere. Secure your future. Own real money. Make silver a cornerstone of your financial plan and give yourself the confidence to weather whatever comes next.